Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Vonnie Quinn. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. We're joined right now by Tim Stenovec and Emily Graffeo as we welcome our audiences across our Bloomberg platforms. That includes television, radio, and yes, Tim Stenovec, those folks still watching us on YouTube.
We're everywhere. You can't get away from us, which is fine on a day like today, which is a jobs Friday. I got to tell you that with the data that we saw come this morning at 8:30 Wall Street time, I was expecting a bigger reaction with the equity market, given that we're kind of seeing this reset when we think the Fed is going to cut rates. Just not seeing that with equities today.
It's all about the bond
nothing
market.
Happening.
It's all about bonds.
It is all about the bond market.
That's what Bloomberg's Michael McKenzie told us earlier today. And you look at that market, we have the 2-year up almost 16 basis points, a big sell-off there in the market after that hot labor market data.
You have to wonder if this whole idiom of sell in May, go away just doesn't work this year, right? We're at record highs, and even if we're seeing a slight sell-off, I mean, I'm not sure you could even call it a sell-off. It really is in individual names and individual stories.
Yeah, and we talk about this idea coming off those record highs from earlier this week here and setting up for what is now going to be a weekly gain for both the S&P and the NASDAQ. The Dow Jones Industrial Average also clinging to a weekly gain. But the Russell 2000, those small caps, the mid caps, the transports, all lagging this week once again. Yeah,
I mean, I think the question that I have is how this data that we got today when it comes to payrolls, Romaine, changes what the Fed at least does in its dot plot next week, which we'll get on Wednesday. It's kind of the next big catalyst.
Yeah, those economic projections are going to be huge because they are going to have to make some shifts because so much has changed in the last few weeks since the last one we got 2 meetings ago. Let's walk you through the numbers here on this Friday afternoon. The bells ring, people clap, and the markets are down. The Dow Jones Industrial Average lower by roughly about 88 points or about 0.2%, though it is going to finish higher on the week by about 0.3%. The S&P 500 lower by 6 points or 0.1%, even though it's going to finish higher by about 1.3% on the week. Similar story for the NASDAQ Composite, a drop on the day of 0.2%, a gain on the week of 2%, while the Russell 2000, that has been your laggard on the day and on the week, a 1% decline here on this Friday afternoon and a more than 2% decline on a weekly basis.
Okay, peeling back one layer at least of the S&P 500, we did see 187 stocks move higher on this Friday, 313.
Can you name all 187?
No. I mean, I got to tell you, just ahead of the gainers and decliners, slim pickings today.
All right,
slim
there you have
pickings.
it. Deep tease.
Yeah.
Tell you what might be a surprise, the banks rallied. JP Morgan best among them, up 1%. If you look at the IMAP, you'll see that the financials did the best, and after that, looking at IT companies and so on. Many sectors, though, were in the red, including utilities, staples, many of those defensive plays. So it was a really bifurcated market, a little bit of risk on, and at the same time, that jobs report and the possibility of higher for longer rates definitely impacting things. Obviously, it's good for banks in certain ways if there are higher rates.
You know, I did say it was slim pickings when it came to gainers. I did want to go with Apple, though. We finished the day higher by a little over 1%.
It's a bold call.
It's a bold call. Worth, any excuse to talk about WWDC next week and what's going on out there in Cupertino, which, of course, we'll have live coverage of throughout the day and throughout the week next week, is worth talking about. According to our own Mark Gurman, WWDC this year will focus on, Romaine, I'll give you one guess. What do you think it'll be?
I don't know. What is it? It's going to be AI?
It's AI.
Oh,
that's right. Yeah, you're right.
So does this mean that they're actually going to make Siri useful?
Yeah, I think Siri's pretty useful. I don't want to say that word over and over again, or else my phone's actually going to go off.
Oh, I disabled mine.
You did. So maybe that's why it's not useful, because you disabled it. It has gotten increasingly useful.
I don't like them listening in.
It's been around for more than a decade. I think it's gotten pretty useful recently. But yeah, could be getting a lot more useful. Deep integration of AI in apps, summarization features. It'll recap articles, web pages, and Safari, sum up meeting notes, text messages, and emails. The question I have is who's getting texts long enough that need summaries? So
summary of a text.
A summary of a text message. Also a password manager.
If somebody's texting you text that long, then you have to need to summarize. Just cut them off. Just block their number.
That's a good idea. All right, Apple up 1.2% today. Automakers, actually traditional ICE automakers that work on internal combustion engines getting a bit of a lift today, including General Motors, higher by just about 0.2% today. This after the news that the Biden administration is easing requirements for automakers to increase the fuel efficiency of new cars following industry pushback. So here's the data. Car makers must reach an average of 50.4 miles per gallon across their fleet by 2031. That's according to a final rule that was announced today by the U.S. National Highway Traffic Safety Administration. That new standard is a 1.4 mile per gallon increase from 2026, but it's less than the 58 miles per gallon that the agency had proposed previously. So the idea here, it's better for companies that are working on cars that use traditional internal combustion engines, and not as good for those EV companies that, of course, have EV motors. And Yext shares moving higher on the day today. A little potential M&A news, higher by 9%. The company preparing to explore a sale after attracting takeover interest. This according to a report earlier from Reuters, who cited unidentified people familiar with the matter, Emily.
All right, well, Carol Massar is out, so that means Tim gets to do the gainers.
I get to do
and
the
he
gainers.
Gives me the decliners, and he was very excited about this for whatever reason. But I'm happy to talk about the decliners. Let's look at DocuSign, now down only 5% at the close, but down as much as 10% on an intraday basis. Biggest drop since March 2023 after the e-signature company forecast billings for the second quarter that fell short of estimates. And that stock down despite the fact that the revenue forecast was better than expected. I'm also looking at Vail Resorts, ticker MTN. Get it? Mountain. This is a ski resort giant, and the shares dropped as much as 12%, biggest intraday decline since the height of the pandemic, March 2020, after they slashed their full-year total reported EBITDA outlook and published third-quarter earnings per share that missed estimates. Analysts reacting negatively, with JP Morgan cutting its stance on Vail to underweight from neutral. And finally, we are still talking about GME, GameStop.
There we go.
It's actually up over 20% when you look at it on a weekly basis, but today falling over nearly 40%. Just a lot of volatility all around. They reversed a pre-market climb. The video game retailer said in a filing it may offer and sell up to an additional $75 million shares of a Class A common stock. But I'm going to say this share decline is all about the Roaring Kitty live stream. Maybe investors just not thinking that it lived up to the hype that it was supposed to be. We had over 500,000 people watching that live stream. Romaine Bostick was one of them.
I certainly was here. I couldn't take my eyes off of it. Not sure you wanted to put money behind it. There was a lot of volatility in that stock. There was also a lot of volatility in the bond market today, particularly in U.S. Treasuries on the heels of that jobs report. A massive spike in yields, 14 to 15 basis points on the shorter end of the curve, 11 to 12 on the longer end of the curve. And we should point out that these numbers, these are some of the biggest daily moves that we've had all year long. It's at least the biggest daily move going back to mid-April. And if you remember what happened on that day, I think it was April 10th, when we had that shock CPI report to the upside that really rattled folks. This really does seem akin to that, where a lot of people were really taken off guard, folks. Everyone thought 272,000 jobs, no one thought. 77 estimates in a Bloomberg survey, not a single one was at that number.
The question is, does this provide yet another buying opportunity? If you missed the last 4 buying opportunities, Stephen Major has been big on this at HSBC. You know, the 2-year yield has hit 5% several times, and investors, perhaps not the first time, not the second time, not the third time, maybe not even the 4th time, trusted that they should get in. Is now the time, or are we going to go higher once again?
Well, that's why I was so surprised to see such a muted reaction from the equity market, given that it might change what the Fed was going to do this year. And if that happens, then, you know, the way that investors value these stocks using discounted cash flows will change, because rates will change, Emily. So it was a really surprising reaction, at least in the equity market, given what we saw in the bond market.
Yeah, and especially when you think about what had happened earlier this week with stocks kind of shrugging off the JOLTS data, but the bond market reacting really heavily. It seems like for the equity market, at least before the bell and the declines right before the bell, they just don't seem to mind.
Yeah.
Bad economic news is good. Good economic news is good.
Well, this really does set us up, though, because next week is going to be huge. We get a CPI report in the middle of the week, which happens to come on the same day that we get that Fed announcement. There's a lot of other cross currents out there. So what better reason than to launch our show, The Close, a big relaunch, and we're actually going to be in a brand new studio, Tim. Unfortunately, you won't be there. You and Carol have to stay in the radio booth. But
hey, we'll have our time.
Yeah, one reason why we've been on this set for the last couple of weeks. They've been rebuilding ours, and this is more than just about the optics here. This really is a refresh and a closer look here at just how important the final hour of trading really is, guys. This is critical. You talk about the volume in this market. The majority of that volume comes in the final hour of trading, really in the final half hour of trading. And you're not going to really understand what's going on, and more importantly, what the setup is going to be for the day after, unless you're watching us here at that time, right here on Bloomberg. Look at those pretty faces that we have on the screen right now, Tim. You want to read them, or should I?
You go ahead.
Steve Wozniak going to be joining us on Monday. Former Apple co-founder, the former CEO of IBM, Sam Palmisano, the Bond King, Bill Gross. Olu Alagana going to be joining us over at Mercer, and Raghuram Rajan, of course, former India central bank chief, also going to be joining us. And really, that's just 5 amongst, I think we have something like 75 people joining us next week. I could be off on my count here, and they're all wonderful, Tim.
You're setting it up to be really high expectations, Romaine.
Yeah, so, I know. Overpromise and underdeliver. Isn't that how it goes?
I think that's not what we say. Hey, it's been great being with you guys on Beyond the Bell. I look forward to whatever happens on Monday in the new iteration of the close. Looking forward to that. And also, I wish you all the best weekend, because that does it for Beyond the Bell, our cross-platform coverage of the market close on Bloomberg Television and Radio, Bloomberg Originals and YouTube.
Is Emily going to be here too?
On Monday, she's not going to be here. Carol will be back.
Yeah.
Okay.
But you know what?
I'll be here later today covering the S&P 500 rebalance.
Okay, there we go. You can look forward to that. Have a great weekend, everyone. We'll see you later.